Right, it's actually a nice time to come back over because of what David was saying in respect to the Aussie and cable, and also just to catch up on what's been happening with pound Aussie. But just before I do that, just want to highlight something on the currency matrix, and that is the values of these numbers that are displayed on the indicator. And what happens is the higher, let me just take them all off for a second and just put Aussie up for a minute. There we are. We're now looking at the we're looking at pound Aussie, but we're looking at it now from the perspective of the Aussie. We're turning it around. These values that you see here, the higher the value, then what it tells you is that it's probably a really good move, and it's been moving quite strongly. What's been interesting on the hourly chart for this indicator is that even though we've had moves in the market, the values have been relatively low. Now, what we're doing with this indicator is that we are going to upgrade it in the sense that the values that are displayed at the extremes, we're going to put some sort of system. There is a system in place which will tell you whether that value is average, if it's normal for this time frame, or is it below average, or is it above average. So that's the first thing we're going to do. But what's also interesting is to compare the values at either extreme. So this is the pound Aussie, and as we were looking at the as David was saying, it seemed that the move is being determined by Aussie, more by Aussie selling, the pound buying, certainly in the pound Aussie, because the value that we have for this pair, which seems to be the strongest pair in this time frame on the matrix, we've got plus 40. But when we look at the Aussie dollar at the bottom, we've got minus 69. So if that was, first of all, we have the Aussie at the top, at the bottom, so the pound doesn't feature in. But if we had a pound pair down here as a sell, as it were, we want to see a balance. And what it does, what the matrix does, it doesn't only just tell you which pair is been moving strongly, is at the top or the bottom, but it also gives you an insight into what is driving that pair by comparing the values of the two pairs at the extreme. And because we have the Aussie as the common currency in these two pairs, what this is, what this is telling us, that the Aussie is certainly selling off heavily, but not against the pound, but against the US dollar. So going to look at the and in fact more so than against the cable. If we just have a look here, where is let's have a look at the dollar. Where is a cable? Well, cable is, although there's been a really good move in cable, as we can see here, the strongest moves have actually been in against the two commodity currencies, which is the New Zealand and the Aussie. Now that kind of prompts another question. You think, oh, well, that's interesting. Well, let's go and see what's happening in terms of sentiment. And the answer is there for it to all to see, because the NASDAQ is down 45, because the commodity currencies, the Aussie and the New Zealand, they are sentiment currencies. So that move that we are seeing, strong, heavy selling in the two commodity currencies, is tied to the fact that sentiment has soured. The NASDAQ, is not roaring up by 100 as it was yesterday. It's actually down 44. Not a huge, in terms of how the NASDAQ has been moving recently, it's not a massive move, but it's enough to change the sentiment mood in the market. Right, so that's that. So if we go to my Ninja very quickly, I've actually got the Aussie dollar up here on this is just the 10-minute chart. My time frame charts tend to be 3-minute, the 10-minute. I look at the hour for context, and I also have a Renko chart for actual entries and exits. And we can see here the move, this strong move, the move lower in the Aussie dollar was really it was on the retest of the volume point of control at 69.75, but now we're having, we can see some sort of basing here at 69.35. What I've also done with my currency pairs is I've actually isolated them on the CSI. This is just a 10-minute CSI, and this is what you can do. As I said, with these indicators, you can isolate individual currencies, as you can do on the CSI, or you can isolate the pairs both on the CSI, on the matrix, on the array, and on the heat map. And we'll go over to David when he has a closer look at the heat map in a second. Just very, very quickly, these are the pairs that I've been just happen to have on this particular workspace. I've got here, what I have here, I've had the Aussie, the pound Aussie moving kind of in the same direction. I'm now seeing a little bit of a divergence. There's a little bit of buying coming into the pound. I know, having looked at the charts earlier, I hit that very strong resistance on the hourly chart, so possibly, you know, has enough volume gone in to actually move it above that resistance. So I'll have a look at the chart, but have a look at a pound at the cable. What's happening here? Again, we're seeing a change of sentiment towards the British pound and the Aussie. There it is. Now this is actually setting up to, as David was saying, he likes reversals. How you play with this information that the indicators and the charts tell you you have to decide for yourself. We're looking at the CSI for the Aussie dollar. What we're seeing is an overextension on the US dollar and an overextension on the Aussie dollar. And we know by looking at the matrix, this has been you know, a strong move in this particular currency, but a currency pair. But as we know, you know, this is a market of mean reversion. You get these sinusoidal waves. So you're coming to a situation of overbought or oversold. If this is the kind of setup that you like to see, you would be now looking to see, well, is there potential for a reversal? This is what the charts are telling you. This is what the indicators are telling you, and you know, and you move on from there. I'm for myself personally, for whatever reason, I'm not a huge reversal trader. I tend to look more at congestion phases. I feel more comfortable with a breakaway trading. David is, as I said, I would say he would agree with me. He's much more an out and out reversal trade. This is what he likes to see. He likes to see these overextensions, and all things being equal, he will then move in. There are all sorts of factors to be taken into account in terms of your stop loss and your stop loss management with reversal trading. It has to be that much wider, because you know, everything can be set up for a potential reversal, and it will simply perhaps go into consolidation, perhaps even take another leg lower before, you know, you get the reversal will come in. You'll have to look at the volume going in. You have to look at the candle patterns. So your stop loss has to be that little bit wider. With breakaway trading, for me, the main advantage of breakaway trading is from the volume point of control, this area on the chart, which is, in terms of, as David said, it's like the fulcrum. You could call it fair value in terms of market profile. They call it fair value. It's where the market is happy to transact. There is no firm direction. I talked about it last week when I said that this markets move with market orders. You know, limit orders are there, they're in the market. Traders are waiting for the price to hit a particular limit order before, you know, and it's triggered. But how does the market get to limit orders? Well, it gets to limit orders through market orders, because traders are either impatient, or they spot a trading opportunity based on whatever criteria they are using, and so they drive the price in one way or another. And market orders are used by the insiders to manipulate the market. They will go into the market to move it to the level that they want it, you know, because there's a limit order that they want to take out. there's all sorts of stuff that goes in the market, goes on in, behind the scenes of the price action that we see on our chart. Going back to my if you like, my preference, I feel more comfortable with breakaway around the volume point of control is where you place your stop loss. Your stop loss is it's there. The chart tells you where it is. If we look at the chart for the Aussie dollar on here, this is the volume point of control. On this break, where would the logical place be for your stop loss? Well, it's going to be above the volume point of control. But look at this very, very, very strong level of resistance from this the hatch line of the accumulation and distribution. It is massively strong. That is where you can place it, and you can be much more aggressive with your stop. It can be much smaller. You don't have to give it so much room to breathe. Now, the question that comes on, the next question that comes out, oh yeah, but you get a lot of fake outs with a breakaway. And if you use my answer to that is, if you use volume price analysis, well, you will kind of know that that will at least give you an advantage to say, yeah, this is likely to be a true breakout. Also, if you're breaking away from a region such as the volume point from the VPOC, such as with strong resistance, with these strong levels, and you overlay the say the camarilla on it as well, you kind of know that it's going to take a force of nature to get back through. At the worst that will happen, it will congest around that region, and the longer it congests, then you can decide, you know what, this isn't gonna go any further. I'm just going to scratch this trade, and I'm going to wait for a little bit longer. Those are my reasons for why I tend to use the volume point of control more in my own personal trading. But you have to decide. You have to decide whether that's that's really not for you. You really want to be more, as I said, of a reversal trader. But neither way is the correct way. It is it's either my way or the highway. No, it's whatever, as I said, whatever suits you. And also, as I said, the other thing with breakaway is, yes, you will get a situation where you will have lots of small losses, but when the move does move, it can move very, very substantially, and then you manage the trend lower, as we can see here in this trend row. Yes, we had a little bit of a pullback, but look at the volume under the candles. For that up candle there, it's risible. It's absolutely risible, and that's going to tell you that in this trend lower, if we call this the primary trend, we had the confirmed break from the volume point of control. We had rising volume under those candles. Then we had the buyers coming in. Yes, we had a wick to the bottom of that candle. Looked okay. Not a lot of volume under there. It's more sort of a congestion, a little bit of a congestion, which you normally get. But this is the key candle, because you had buying under this one, not a lot of volume under that one, and you think, big candle coming to the upside coming here. You think, great, that is a potential reversal. But look at the volume under this key candle. It's very, very small. At a time when the market is very liquid, you think, no, this is simply a minor pullback. This is just a little minor trend higher, and then the move gets underway with a degree of momentum. You have a widespread candle, rising volume, not a huge amount of volume, I accept. Then you have this one, it's rising again. Now this candle is the most interesting because it's at the London Open, a lot of volume driven into that candle, but nothing is happening. You've got wicks to the top, wicks to the bottom. Yes, I accept there's a bit of a battle going on. If that was going to drive higher, that should be somewhere up there. It's not. Again, we kind of move into a little bit of sideways, a lot of volume going in again, a little bit more indecision, and then the drop lower. And we're down here at 69.35. It looks like it wants to reverse. We can see from the CSI it is at an extreme, but as I said earlier, for this reversal we will have to wait, and also look at the other charts with the other indicators on. I haven't got it here. Let me just quickly this is on the hourly chart. Let's just put in AUD, USD, see where we are here. Let's have a look. I don't think I've got enough data. No, yes, I have. For some reason, it's not pulling up. Let's have a look. Let's change the template. I'll go on this one. Ah, there it is. It has turned up. Just took a little bit of time to come through. Where are we here? This is on the hourly chart. Well, the move that we're looking on the 10-minute chart is a potential short-term reversal, but this is still looking fairly bearish. It's stopped because it's at quite a strong support platform that we have here. Obviously 69.40, but where is this heading to? Well, certainly down. It's got potential to move down to 69.30 and then further stopping points on the way there. So yes, the reversal has been highlighted on the 10-minute chart, but you do have to see it in the context of your multiple time frames. As I said, my time frames are 3 minutes, 10 minutes, and an hour. Now, the reversal we're seeing here, yes, on the 10-minute, but it could be a perfectly tradable one if you are if you're a scalper. If you're down on the 1 minute, the 2 minutes, and the 3 minutes, they may be enough for you to take that as a reversal. It's really, really down to you. We can only, David and I can only explain how price moves in terms of through the perspective of volume price analysis. We have these indicators that we've developed. How you adapt them, how you use them in your own trading, that is pretty, that has to be down to you. I'm just going to pass over to David because you're going to do the currency heat map, David. Yeah, because that's Chris is absolutely right. Thank you for pulling us up on this one. We are very remiss about the currency heat map. It is a very, very powerful indicator and we really don't make enough of it. So I'm just going to pass over to David.